Hey guys, hope you're doing well. I'm just going to do a quick trade breakdown on two trades I took this week on GJ. We'll just start with some fresh charts here. The first trade so if you remember last week, what would have been coming up on 2 weeks ago, I was anticipating this trend line break here to kind of carry price higher, but that ended up failing, and we ended up putting in this impulsive move, and I caught a little bit of this drop there. This week ended up just being a range week, just a really ugly back and forth, just kept taking highs and taking lows, but there was a couple of trading opportunities in there for me. The first one being once I kind of established that this range was just ranging, between, 189, 50s down to 188 20s or so, just kind of trying to trade those tops and bottoms, so to speak. So the first trade for me came off of this confluence here, where we used that impulsive move there from the previous week, and we bring in our 618 fib retracement there, and lining up structurally, we got this channel topper here, trend line top there, and then we can use a couple of these different little structure levels here. There's the these structure levels back here, but basically it was just a range high play, right, with some trend line confluence and some little bit of fib confluence. On the lower time frames there was like a profit target confluence, I believe. If we look at let's see, -68 something, somewhere up there like that. So we had probably 50% retracement or so, maybe 618. So coming out of these lows, we came right into that 618 retracement and then pushed up to the -61.8 profit target. And my entry was really good on that. And I was targeting range low, but we came right back down to essentially where it rocketed off of and found support and then pushed back up. So this one got trail stopped out about 70 pips or so from my entry. So my entry was, I think, 89, and my stop was somewhere up in here. So it was a little, not quite 2 to 1 after the trail stop, I believe. So that was the first trade for about 70 pips I think I got taken out of. The second one that I wanted to review was coming out of the lows. So if we bump out to the daily chart and just kind of get an overall view of what the heck GJ is doing, because we were just stuck in this range here. My theory was that once we broke December's low here, and this is January's low here, that we kind of got this sharp move down followed by a sharp move up. And when I see those, I'm thinking stop hunt or liquidity grab or something like that, like just an order reach, order grab. And since we're struggling so much to get through back down to these lows, that was a pretty good indication that maybe this was our grab. So let's look for some confluence at range low to maybe go long here. So just grabbing that as a trend line bottom as kind of an initiation point, an establishment point there. We can see that was lining up with that 188 level. That was pretty nice. And fib wise, if we bring in kind of like the fibs high to low there, tighten that up a little bit, we have that 618 fib retracement really close right there, being protecting the low there. So I was able to get an entry right at that range low, and take that right back up to those highs that we had made the previous day. And my entry was right at 188. Actually, it was 187.99. Somewhere right around in there. So, and it was after price had bottomed, already tagged that 618 and range low. So I took 60% off at, I think, 207 pips maybe, like right as we were tagging these highs here, for a little over 2-to-1. Now it was a little bit bigger stop loss, and actually this week was a drawdown week for me, to be honest. I think I'm down 1.3%, but this trade recouped about 1% of that. Now when I don't start off the week strongly, I start strategically dropping risk by 1/4%, 0.5%, depends on how much I'm down, but I try my hardest to limit my weekly loss to no more than like 2% per week, because it just kind of gets, because the way I don't keep my risk the same, so I'm not risking 1% of my account each time. I start dropping that risk based off of the drawdown that I've dug myself into. And that's a way to, really prevent blowing up accounts. I mean, because if you just get into this prolonged drawdown and you're constantly risking 2% of your account after each time you're losing, you're just risking really more and more and more each time. So that's burned me in the past. And then you kind of get into this, like, FOMO, or trying to revenge trade, trying to make those profits back, and it just never typically works out in the long run trying to do it that way. So I really put a huge emphasis on minimizing my downside, and trying to preserve as much capital as I can. And I'm only, like I said, I'm not shooting for the moon these days. I'm just looking, if I can get 3 to 5% gain each month, that's good for me long term. I mean, because if you look at those percentages on, if you've built up your capital to, even just $100,000 account, a 5% gain over the month, which is totally achievable, is $5,000. And I know inflation's crazy these years, but if you live minimally like me, you only need a couple grand to live on each month, if you don't have a whole lot of debt, which I don't. So just keep that in mind. So yeah, technically coming off a drawdown, I'm still up 7% for the year so far. So I'm not going to, and that's when I was talking about I strategically, I have been able to build up a bit of a buffer so far over the past month and a half, because I didn't even take my first trade for the year until January 20th, I think. So strategically, I'm working off of that buffer that I've built up. Like, I'm not giving that back. Even if I have to go the entire rest of the year on just trading within that little buffer, that's what I'll do to ensure profitability. But I'm not typically worried about that. But there is a chance that you just run into a string of losses. So losing week for me happens still. So we're just going to ride again this week and see, and just take try to really focus in on good quality setups, and go from there. But yeah, currently up 7%, a little over 7% for the year, and a couple trades in January, because like I said, my dad passed away, so I didn't trade for the first several weeks in January, but had about 1.5% gain on January, and then February was a really good month, but finished off on a red week, which put me back a little, like 1% or 2%. But yeah, no, we're just going to go in slow growth and just continue the ride the technicals and see where we can get come March. So hope you guys learn something, and not every week's a red week. Don't think that you're going to win every week. I don't, even after a decade in the markets. I took probably a little bit too many trades. I've been trying to do more day trading, which typically that's 50-50. Sometimes I'm spot on, and sometimes that can kind of slowly make the account bleed a little bit. But big lessons this week, and for you would be to just plan the trades. Don't rush into them. You're not, depending on your lifestyle and what you're interested in. Just take quality trade setups that you have planned in advance, and where you're getting in, where you're getting out, for profit and loss, and really focus in on the drawdown, the risk management side of trading, because the technicals take care of themselves. Over time, it's just a numbers game. You're just building up a certain number of level of confluences that are basically support or resistance in some way or another that would prevent price from continuing through. And it's all just a numbers game. It's not gonna hold every time, but it doesn't need to. And if you can grab 1-to-1 trades and get 50% of 50-60% of your trades right, which is totally doable with consistent approach to the market, that's totally doable. So I'll leave it here, and just remember, again, not every week's a green week, and all you're trying to do is survive, and then eventually you'll be able to thrive. So take care, stay humble, or you'll be humbled.